Warren Buffett portfolio, stocks of public companies which he owns via his holding company Berkshire Hathaway. Warren Buffett is a chairman, CEO and biggest shareholder of Berkshire Hathaway Incorporated. If you've ever wondered why Wall Street experts and everyday investors pay so much attention to what Berkshire Hathaway CEO Warren Buffett buys or sells, just take a closer look at his track record. Since taking the reins in 1965, the Oracle of Omaha drove his company's Class A shares to a total return of 3,600%. That's 120 times the broad-based S&P 500, including dividends, over the same period. Apple, $124 billion, 42% of invested assets including assets held by Warren Buffett's secretive portfolio. New England Asset Management's position in Berkshire's tech stock Apple totaled more than $124 billion in invested assets as of the end of last week. That's about 0.40 of every one Buffett invests in Apple. In addition to being the largest publicly traded company in the United States, Apple offers Buffett three main selling points. First, there is the value of its brand and the customer loyalty it brings to the table. According to the Kantar Brands Global Survey released in June, Apple reclaimed the top spot as the world's most valuable brand. The survey identified many competitive advantages, innovations and products that resonated with consumers. For example, the iPhone has taken a little more than half of the entire smartphone market in the United States. The second reason why Apple has invested so strongly is because of its innovation. In addition to developing smartphones, laptops, tablets, watches, and other accessories that consumers can completely stream, the company is in the process of changing its operating model to focus on subscription services. The move to a subscription-based platform should help minimize the revenue peaks and troughs often associated with physical product replacement cycles. In addition, subscriptions offer higher margins and increase customer loyalty. A third reason why Warren Buffett thinks so fondly of Apple is its capital return program. While its 0.6% yield doesn't sound like much, Apple's annual nominal payout of $14.64 billion is one of the largest in the world. Additionally, after launching an aggressive share buyback program in 2013, the company repurchased $554 billion worth of its own stock. In context of how massive this buyback program is, only 5 S&P 500 companies not named Apple have a market capitalization of more than $554 billion, and Berkshire Hathaway is one of them. While not immune to periodic slowdowns, Apple remains well-positioned to grow over the long term. Bank of America, $30.5 billion, 10.3% of invested assets. The second stock bank, where Warren Buffett and his investment team are fully assembled, is America. Bank of America, as it's also called, accounted for about 11% of invested assets last week. Note that this figure also includes positions in New England Asset Management, a specialty investment firm owned by Berkshire Hathaway. There's a very good reason why financials are Buffett's favorite sector: they're cyclical. As a long-term investor, the Oracle of Omaha knows well that periods of economic expansion last far longer than recessions and recessions. Although bank stocks like Bank of America take their share when downturns occur, they benefit more from disproportionately longer expansions. In other words, patience pays off big time when investing in bank stocks. It's a particularly exciting time for the $30.5 billion closing at Bank of America. At no point in history has the Federal Reserve aggressively raised interest rates in a sinking stock market. While high interest rates threaten to cool lending and slow economic activity, floating interest rates should be a boon for banks with outstanding loans. Bank of America's net interest income rose $2.7 billion in the third quarter from a year earlier, and the company estimated that a 100-point parallel shift in the yield curve would add $4.2 billion to net interest income over the next 12 months. Bank of America's push for digitization is also paying off. The company closed September with 43 million active digital users, up 5 million from the comparable quarter of 2019, and generated 48% of total sales through online or mobile apps. In addition to added convenience, digital transactions cost banks a fraction of in-person and phone-based interactions. As more users switch to online banking, Bank of America should be able to consolidate some of its branches and improve operational efficiency. Finally, bank stocks have a pretty rich history of rewarding shareholders in good times. It is not unusual for Bank of America to approve capital return programs that exceed $20 billion a year, including dividends and share buybacks. Chevron, $23.7 billion, 8.02% of invested assets. The third stock that makes up a significant part of Warren Buffett's Berkshire Hathaway investment portfolio is the Chevron Energy Fund. As of last week, Chevron accounted for about 9% of invested assets, including shares held by New England Asset Management. What's interesting about this position is that by 2022, energy stocks had no more than an 8.02% weighting in Berkshire's portfolio this century. Only Chevron now has an 8.02% stake, and Occidental Petroleum contributes to energy becoming Buffett's third largest sector by invested assets. With nearly an eighth of his company's invested assets tied up in energy stocks, Buffett is sending a very clear message that oil and natural gas prices will remain above average for some time. Although Chevron is an integrated operator, it derives its best revenue from drilling. A troubled energy supply chain due to underinvestment by energy companies due to the pandemic, as well as Russia's intervention in Ukraine, favors higher spot prices for energy products. Chevron is also a much safer bet than most oil and gas stocks. As mentioned, it is an integrated operator, meaning it operates midstream pipelines and downstream assets, refineries and chemical plants, in addition to drilling and exploration. Midstream providers use long-term, fixed-fee, and volume-based contracts with drillers to generate predictable cash flow. At the same time, oil refineries and chemical plants benefit from increased demand and lower input costs when the price of crude oil falls. In short, Chevron is hedging for whatever the energy market throws its way. This is an oil reserve with a relatively clean balance. As of the end of the third quarter, Chevron had $8.2 billion in net debt, a gearing ratio of 13%. That's lower than virtually all major oil and gas stocks, giving Chevron superior financial flexibility. Historically high energy commodity prices have allowed Chevron to increase its dividend and implement a share buyback program of $15 billion of its common stock in 2022. With a healthy return on equity program and an industry-leading balance sheet, the company has found itself in Buffett's good graces